I got it. The committee will come to order. This joint subcommittee hearing will come to order, and without objection, the chair is authorized to declare recess of the committee at any time. Without objection, members of the full committee not on the two subcommittees conducting this hearing are authorized to participate in today's hearing. This hearing is entitled Protecting America, a review of the Terrorism Risk Insurance Program. And I now recognize myself for 2 minutes to give an opening statement. The Terrorism Risk Insurance Program was first passed in 2002 after the terror attacks of September 11th, but unfortunately both domestic and international terrorism continue to have an unpredictable frequency and severity. In addition, the potential losses are extremely hard to quantify. For this reason, insurers are unable and unwilling to assume significant additional terrorism risks without Tria. That is why timely authorization is critical. Tria has been reauthorized 3 times since, and in 2005, 2007, and 2015, but will sunset in December of 2020. Absent congressional action, which was noted in our Tria roundtable held in Kansas City, Missouri in May of this year. Tria also protects key healthcare and research facilities in St. Louis, who not only work on life-saving cures, but also employ thousands of our constituents. In general terms, if a terrorist attack occurs under Tria, the insurance industry covers the entire amount for relatively small losses. For a loss that's medium-sized, the government assists insured initially, but is then required to recoup the payments it made to insurance through a levy on insurance policies afterwards. The federal role is to spread the losses over time and over the entire insurance industry and insurance policyholders. As the size of losses grows larger, the federal government covers more of the losses without this mandatory recoupment. I will stop there and yield to the new ranking member, Mr. Stivers of Ohio, and let me say, welcome aboard, and we look forward to working with you. Mr. Stivers.
Thank you, Mr. Chairman. I really look forward to working with you. Appreciate your leadership, and it's an honor to get a chance to work with you as the ranking member. Tria was originally intended to be a temporary program to stabilize the insurance markets after the 9/11 attacks, and the good news is it worked. But unlike the original version of temporary terrorism risk reinsurance, the threat from terrorists has proven to be anything but temporary. And insurers know this. A lapse in the program would result in disruption far beyond commercial real estate markets in big coastal cities. For example, near my district, The Ohio State University will beat Michigan in football this November in front of about 100,000 attendees. This year it'll be in Michigan, but last year in the Horseshoe. And all that's covered for insurance thanks to a Tria program. In fact, universities are some of the biggest buyers in this market, and they'll suffer higher insurance premiums if Tria expires. Critical infrastructure operated by Columbus-based utility American Electric Power would force hundreds of dams across our state to pass on higher costs. And that's why this reauthorization is very vital. I strongly support reauthorization, but we shouldn't be scared to build on the program and improve it where we can. I look forward to working with the chairman and all of the members to explore options to make the program even better. I want to thank the witnesses for being here, and I yield back the balance.
I thank the gentleman from Ohio. The chair now recognizes the gentleman from Missouri, the chair of the Subcommittee on National Security, International Development, and Monetary Policy, Mr. Cleaver, for 2 minutes.
Thank you, Mr. Chairman. It's a pleasure working with you as it relates to the Terrorism Risk Insurance Act. And as you would imagine, after the 9/11 attack, the cost that individuals had to pay or corporations had to pay was so out of line with what they paid prior to 9/11 that it put in jeopardy this whole terrorism insurance issue. Tria was born out of a necessity to stabilize financial markets and prevent harm from spilling over into various areas of our economic system, particularly with respect to reinsurance market. In discussing the catastrophic events of 9/11 and the roots of the Tria, I think it's very important to think about the potential risk for attacks in this country and the broad threat that exists beyond the coast, in the middle of the country where I represent people in Kansas City, Missouri. And so I would flag for all in this room that in April 1995, Timothy McVeigh detonated a bomb outside the Murrah Federal Building in downtown Oklahoma City, and about 168 plus people were killed and over 700 injured. The attack damaged 324 buildings within a 16-block radius and resulted in a $650 million in damage. Oklahoma City is right down the street from Kansas City, Missouri, and although I think in people's minds that terrorism leans toward the east, but the reality is that the entire country is in jeopardy, certainly the middle of the country. It's not a northeast or west coast issue, it's a national issue. And I'm eager to continue this conversation with the hearing and welcome all testimony.
And thank the chairman, and the chair now recognizes the ranking member of the Subcommittee on National Security, International Development, and Monetary Policy for 2 minutes for an opening statement. Mr. Hill, you're recognized.
Thank you, Chairman. I appreciate both chairs holding this joint hearing today on this very important topic, long overdue this year that we have a formal hearing before the Committee on Terror Risk Insurance and its reauthorization. As noted, this program was authorized in 2002 in the wake of the horrific attacks on 9/11. In those dark days, insurers withdrew from the market for terrorism coverage, unable to properly model or predict the risk associated to their portfolios. This hurt our macroeconomy and a number of important sectors, put them at risk. Congress responded by creating Tria as a temporary government backstop to losses from these acts of terrorism. Now, 17 years later, and this temporary federal backstop still exists. While Tria continues to be a critically important program, this committee needs to make sure it takes a hard look at the various ways that we could modernize and or strengthen this program. It's our duty as policymakers not just to simply extend the program because that's the easy way out, but instead have real conversations about the strengths and weaknesses of Tria and how we might consider modification. During our last reauthorization in 2015, the committee worked across the aisle to strengthen the program and protect taxpayers. It's in good shape currently, but we need to focus on the future threats that this program will face, modernize the program to make sure it's able to meet those threats. With that, Mr. Chairman, I yield back the balance of my time.
And I thank the gentleman, and the chair now recognizes the ranking member of the full committee, the gentleman from North Carolina, for 1 minute, Mr. Mchenry.
Well, I want to thank the chairman and the ranking members as well. It's good to work with a team like this. So first, I hope this will be the first of a series of hearings so we can understand terrorism risk insurance as a committee. We have half the committee was not here for the last reauthorization. I think it's imperative that they understand the push and pull of this program and the right balance that's been struck. I've supported the reauthorization of this program at every opportunity since coming to Congress. This is an important program that must be reauthorized. We also need to make sure that it's prepared to address the evolving threats. Since its last reauthorization, the capabilities of those wishing to do us harm and the world harm have strengthened. For example, Russia is openly testing cyber warfare in Ukraine. Legislating is hard. This program expires at the end of next year. Yet, our first hearing is a legislative hearing with what seems to be the goal of a one and done. Merely kicking the can down the road for another 10 years without kicking the tires isn't fulfilling our obligations to our constituents. So I'm grateful for this panel being here, and I'm grateful for the bipartisan nature of the reauthorization of Tria, and I'm encouraged that we can get it right and get it done quickly.
And I thank the gentleman from North Carolina. Today we welcome the testimony of Clora Lindley Myers, the Director of the Missouri Department of Commerce and Insurance on behalf of the National Association of Insurance Commissioners. We will also be joined by Ms. Dawn Dinkins, COO, Reinsurance of AXAAL on behalf of the Reinsurance Association of America, and Joe Carter, Acting CEO, United Educators on behalf of the American Property Casualty Insurance Association. Also, we have joining us John Doyle, President and CEO of Marsh. And last but not least, we have Baird Webble, Specialist in Financial Economics, Congressional Research Service. Witnesses are reminded that your oral testimony will be limited to 5 minutes, and without objection, your written statement will be made part of the record. You are now recognized for 5 minutes to give an oral presentation of your testimony. And Director Lindley Myers, we will start with you. 5 minutes.
Thank you. Good afternoon, Chairman Clay, Chairman Cleaver, Ranking Member Stivers, and Ranking Member Hill, and members of the subcommittees. Thank you for this invitation. I appreciate the opportunity to testify today to underscore insurance regulators' support for the Terrorism Risk Insurance Program and to urge Congress to pass a long-term reauthorization prior to the December 31st, 2020 expiration. The NAIC supports a reauthorization of 7 to 10 years. We have not seen any evidence to suggest that the insurance marketplace is capable or willing to voluntarily take on a substantial portion of terrorism risk absent a federal backstop. The potential severity and unpredictable frequency for acts of terrorism makes this coverage one that insurers would choose to avoid if given the opportunity. TRIP provides insurers with the certainty they need to offer coverage for acts of terrorism. The availability of this coverage helps ensure economic stability for commercial policyholders, lenders, builders, and businesses throughout our country. Without TRIP, we are concerned that terrorism risk insurance would become unavailable and unaffordable, and we could revisit some of the same market disruptions and economic uncertainties the nations face after the aftermath of September 11th attack. While we support the continuation of the program, we have deferred to the insurance industry in terms of program triggers and deductibles and how these variables would impact their pricing and willingness to offer coverage. It is also important to note that TRIP is not a case of the federal government crowding out the private market. Rather, it fosters the existence of a broader market for risks that would otherwise be largely uninsured or more likely borne by the taxpayer. This program is intended to have minimal cost to taxpayers, and the federal outlay would occur only in the event of a certified act of terrorism that meets thresholds for insurance losses, insurers' deductibles, and copays. Even then, insurers must reimburse the federal government for its expenditures if these thresholds are met. If losses remain below these thresholds in any particular year, the private market is responsible for the entirety of these losses. If Tria expired, insurers might place limitations on commercial insurance policies to exclude terrorism coverage or choose to withdraw from the market completely. When Tria briefly lapsed in early 2015, conditional terrorism exclusions were activated, which created some uncertainty in commercial markets. Furthermore, an expiration of Tria would be particularly disruptive to the workers' compensation market, as these benefits are codified in state law and an employer cannot decline to provide coverage for acts of terrorism. Without Tria, workers' compensation insurers might raise the prices or decline to write coverage for businesses with many employees concentrated in a single location or near iconic properties. As insurance regulators, our top priority is assessing and regulating the solvency of the industry to ensure that they have the means to pay policies. Therefore, insight into the insurer's exposure to this challenging risk segment is critical. Beginning in 2016, insurance regulators in all states and the District of Columbia agreed to participate in a data call to collect information related to terrorism risk insurance. In recent years, we coordinated with Treasury's Federal Insurance Office on a data call that reflects our respective responsibilities. My written testimony provides details of our findings from our data calls. These data collection efforts are particularly important when considering that it takes large amounts of insured losses prior to TRIP sharing loss being activated. Understanding this potential exposure is crucial for our ongoing solvency regulation. In conclusion, state insurance regulators urge congressional action to reauthorize Tria to ensure a sustained and stable terrorism risk insurance marketplace and provide American businesses with the essential coverages needed to successfully operate in today's uncertain global environment. I thank you for this opportunity to testify today, and I would be pleased to take your questions.
I thank the witness for her testimony. Mr. Dahl, you are recognized for 5 minutes.
Good afternoon, members of the committee. My name is John Doyle, and I'm the President and CEO of Marsh. I appreciate the opportunity to speak with you all today about TRIPRA. For our company, the impact of terrorism is deeply personal. Marsh & McLennan lost 295 colleagues on September 11th. We also have a unique perspective on the terrorism insurance market. Marsh and our sister company, Guy Carpenter, are leaders in providing risk advice, analytics, and brokerage services to businesses, insurance companies, and reinsurance companies. We consider TRIPRA to be a model public-private partnership. It restored insurance capacity at a critical time following 9/11, and it continues to ensure a well-functioning terrorism insurance market today. TRIPRA is the fundamental reason businesses have access to affordable and widely available terrorism insurance coverage options. We strongly endorse a timely reauthorization of the program. This afternoon, I would like to briefly cover 3 key areas in my statement. 1, to emphasize TRIPRA's critical role in workers' compensation. 2, to comment on the current state of terrorism insurance. And 3, to express caution if the renewal of TRIPRA is pushed too close to the expiration date. TRIPRA plays a critical role in the workers' compensation market. Workers' compensation insurance provides for the cost of medical care and lost wages for injured workers and death benefits for the dependents of people killed in work-related accidents. In most states, employers are required to purchase workers' compensation coverage, and insurers cannot exclude terrorism perils from these policies. Therefore, the closer we get to TRIPRA's expiration, the more limited options will become for buyers, as rates will increase or coverage will become unavailable. In addition, workers' compensation policies cannot limit coverage for nuclear, biological, chemical, or radiological attacks. These incidents can lead to very large human and economic loss, but coverage is not typically included in reinsurance programs that are meant to protect insurers from risk aggregation. Businesses and organizations with large concentration of employees will be most affected by potentially dramatic price increases or a lack of available coverage. In 2014, the uncertainty around TRIPRA renewal led some insurers to step back from insuring businesses with high employee concentrations. It's also important to point out that TRIPRA covers losses associated with business interruption. In addition to physical damage, a business may be forced to close for an extended period of time as a result of a terrorist attack. Businesses need protection from the effects of a terror attack in their community. Insurers and rating agencies are closely monitoring legislative activity related to TRIPRA. Uncertainty about the future of the federal backstop will impact the price and availability of insurance coverage. That, in turn, could affect business decision-making about hiring and investing, which can impact the broader economy. Finding from Marsh's terrors report once again highlight that terrorism risk is not only a big business or a big city issue. For example, in 2018, a majority of Marsh clients in Alabama, Kansas, North Carolina, and Ohio purchased property coverage with TRIPRA. Educational institutions had the highest industry-specific terrorism insurance take-up rate in 2018, while companies in healthcare, hospitality, life sciences, and nonprofits are all in the top 10 of buyers, underscoring how industries across the board depend upon TRIPRA. These organizations can be found anywhere, from small college towns to urban city centers. Finally, a cautionary note of market disruption if TRIPRA is not renewed or is substantially delayed. For policies effective on or after January 1st, 2020, insurers are already considering options to underwrite workers' compensation without the potential financial protections provided by TRIPRA. Some insurers will be unwilling to offer terrorism coverage beyond the expiration, or they'll significantly increase prices to cover the greatest risk to their portfolios. This impacts businesses of all sizes across the country. If the federal backstop ceases to exist, we could see a domino effect of increasing price across multiple insurance lines, not just terrorism, with the likely result of major marketplace disruption. This trend will begin to intensify in January of 2020. At Marsh, we understand the role insurance plays in the moments that matter for people and for business. We enable risk-taking. We guide clients through effective risk management strategies, and we step in when losses occur to help people and businesses get back on their feet. But when it comes to catastrophic terrorism risk, we can't do that alone. Our clients need TRIPRA. Therefore, we stand ready to collaborate with you to share our experience and expertise on this critical public policy matter. I look forward to your questions. Thank you.
Thank you, Mr. Doyle. And now we recognize Mr. Carter for 5 minutes. You may proceed.
Thank you, Chairman Clay, Chairman Cleaver, Ranking Member Stivers, Ranking Member Hill. I'm Joe Carter, the Acting President and CEO for United Educators. We're a risk retention group, an A-rated risk retention group, owned and governed by 1,600 schools and colleges and universities across the United States. This includes 341 educational institutions that are located in the districts for the representatives in this room, and more than 75,000 employees educating approximately 3.3 million students. I'm also pleased to note that 63% of the combined committee in this room has alma maters that are insured and rely on United Educators for this critical coverage, as well as all of its liability. In addition to representing United Educators, I am testifying on behalf of our trade association, the American Property Casualty Insurance Association, or APCIA, which represents over 1,000 property and casualty insurance companies. United Educators has members in all 50 states, ranging from the largest cities to college towns to rural communities. And our institutions are our owners. They continue to be soft targets, attractive targets for potential terrorist attacks. Most of these are centers of economic and social collaboration, with activities ranging from massive crowds at Saturday afternoon football games, as the ranking member noted earlier, convocations, commitments, and yes, presidential debates. Many also pursue intensive research to solve problems. They have labs, they have material that would certainly be attractive to those seeking to harm America's worldwide leadership position in education and research. Nearly every one of these, if not all, have taken the terrorism endorsement that we're able to offer because of Tria. This allows them to continue with their missions of teaching, research, and service to their communities, your communities. United Educators would not be able to offer this coverage without Tria. The unfortunate events of September 11th made the enactment of Tria program essential as our nation struggled and needed recovery and stability in this area in the face of the unforeseen. However, commercial insurers simply could not confidently and accurately model, predict, project, and price this coverage. On 2 prior occasions, United Educators has testified before this committee on that very complexity, and today those conditions still remain. Because of Tria, the private market can participate heavily in coverage and financing this terrorism risk. It adds great stability that our schools and our businesses need. Commercial insurers play a fantastic role standing behind the businesses that power America's economy. but they're just not in a position to provide that catastrophic terrorism insurance coverage without the support. And as past reauthorizations have increased deductibles, co-insurance, and program triggers, these are placing pressure on balance sheets. But continued upward moves on these triggers and on these levels will certainly affect their ability to meet their policyholders' needs overall, not just for terrorism coverage, but also for the other lines that require terrorism coverage as well. It is critical that Congress refrains from increasing these levels further. Also, state laws prevent workers' compensation insurers from excluding terrorism, which makes Tria especially critical for them. The expiration of Tria would cause many of them to reassess their terrorism exposure against their overall financial position. And essentially, without this program, they'd have a Hobson's choice, one that maintains a solvent position, or they provide the coverage and put their company at risk. Congress is rightfully concerned about protecting taxpayers on this program, and it is fiscally responsible. Tria keeps commercial insurers heavily involved in writing terrorism risks, but it has a feature which most taxpayer expenditures can be recouped from the market in the event that funds are needed. And on past occasions, the delays to reauthorize has created uncertainty and instability in the market, and that can be an unsettling prospect as you get closer to that date. In 2014, it became very alarming when Congress allowed the program to lapse. Had a terrorist event occurred in that 2-week period, many would have been without coverage. In conclusion, United Educators and APCIA urge you to pass H.R. 4634, which reauthorizes the current Tria program for 10 years. This is just so important to our educational institutions and many other businesses. Thank you for allowing me to testify today, and I'd be happy to take questions.
Thank you, Mr. Carter. And Ms. Dinkins, you are recognized for 5 minutes.
Thank you. Good afternoon.
Turn on your mic for us.
Thank you.
Thank you.
Good afternoon, Chairman Clay and Cleaver, ranking members Stivers and Hill, and members of the subcommittees. Thank you for inviting me to testify. My name is Dawn Dinkins, and I am the Chief Operating Officer of AXA XL Re. AXA XL is the Property, Casualty, and Specialty Commercial Risk Division of global insurer and reinsurer AXA. From 27 offices in the U.S., our more than 2,200 employees help provide insurance, reinsurance, and other risk management services to companies of all sizes, large, multinational, and small, and public entities across the United States. I am testifying today on behalf of the Reinsurance Association of America. The RAA is the leading trade association of property and casualty reinsurers doing business in the United States. Thank you for holding this important hearing on reauthorizing the Terrorism Risk Insurance Program, TRIP, well in advance of the December 31st, 2020 expiration date. TRIP is an essential risk-sharing plan to help pay insured claims in the event of a terrorist attack. TRIP has been a stabilizing force for the insurance market and allows a market for terrorism insurance so that primary insurers can provide coverage and reinsurers can reinsure terrorism risk. The RAA supports the Terrorism Risk Insurance Program Reauthorization Act of 2019, which would reauthorize TRIP for 10 years with no changes. In particular, we urge Congress to reauthorize TRIP before the end of the year to avoid uncertainty with respect to insurance and reinsurance contracts that will begin to renew starting on January 1st, 2020. Commercial insurance and reinsurance availability are key underpinnings of the U.S. economy. Reinsurers like AXA XL support insurers and policyholders in every U.S. state and across all lines of business, both commercial and personal. Although by no means exclusively focused on catastrophic risks, reinsurers have provided critical aid in the economic recovery of almost every single natural disaster in recent memory. For example, the tornado that devastated Joplin, Missouri in 2011, resulted in more than $2 billion in insurance claims, and approximately 40% of those claims were ultimately paid by reinsurers. As another example, insured losses for September 11th in today's dollars amounted to over $46 billion, almost 2/3 of which were absorbed by the reinsurance industry. The threat of terrorism, like catastrophic natural disasters, is unfortunately continuous and nationwide. Moreover, terrorism poses great challenges as an insurable risk because its frequency, severity, and correlation characteristics make it unlike any other insured risk or peril. TRIP creates the framework that allows the insurance industry to offer and provide the protections afforded by terrorism risk insurance across the United States. We hope that TRIP is never called into action, but it is critical that Congress keep the TRIP plan in place. Even with no changes to TRIP, the financial responsibility of the private sector, which includes insurers and policyholders, will continue to increase while the government's share will continue to decrease based on a provision in current law. Because TRIP already contains this dynamic feature, a clean, long-term reauthorization of TRIP means that terrorism insurance risk will continue to shift away from the federal government and taxpayers to the insurance industry and policyholders. Thank you again for the invitation to participate in today's hearing. We look forward to working with you to reauthorize this critical program without a lapse. I'm happy to answer any questions.
Thank you, Ms. Jenkins, and Mr. Webber, we recognize you for 5 minutes.
Thank you. Mr. Chairman, ranking members, members of the subcommittee. I want to thank you for the opportunity to testify today. My name is Baird Wabel. I'm a specialist in financial economics at the Congressional Research Service. And particularly for any of the audience who might be unfamiliar with CRS, we're a division of the Library of Congress whose role is to provide objective, nonpartisan research and analysis to Congress. CRS takes no position on the desirability of any specific policy or policy outcome. I've been in my role at CRS since 2003, so I've been involved in every reauthorization of the Terrorism Risk Insurance Act since. And I thought what I would do for the committee is basically talk in some broad terms about the issues that have been faced by Congress in the past, and in doing so, hit on some of the specifics of the Tria program. The first question that's really faced Congress, and I think still faces Congress, is a federal terrorism insurance program necessary? Tria, as has been mentioned, was passed in the aftermath of the 9/11 attacks, about a year after, as a temporary 3-year program. As the program has approached the expiration dates in 2005, 2007, and 2014, Congress has successively acted to extend the program. This has largely been because of a judgment that the private sector was unable to face the terrorism risk without the federal backstop. What Congress has done in each reauthorization is address, I think, a second question that I would ask, which is how should insurers share in funding this terrorism risk? Through the reauthorizations, Congress has increased the insurer share of funding the terrorism risk. There are 3 basic mechanisms that are used, and these are fairly similar to what I think everybody's used to in terms of a homeowner's insurance policy or an auto insurance policy. You have a deductible situation. In the Tria case, it's sort of a bifurcated deductible. You have a program trigger, currently at $180 million, and that is an aggregate for the entire industry losses. If the aggregate losses don't clear that threshold, no federal assistance is given. In addition to this aggregate program trigger, you have an individual insurer deductible. The individual deductible of 20% of the direct earned premium must be cleared by each insurance company before federal assistance would be given to that insurance company. In addition, you have what is essentially a co-payment. You have an insurer share of the losses that goes above this deductible. It's 19% this year. It will rise to 20% next year. And so the federal share is 81% and 80%, up to a cap of $100 billion. The third way in which the private sector participates is through premiums for the terrorism risk insurance. These premiums are very unlike most in the private sector. The premium, rather than being pre-funded premiums, these premiums occur after the fact. And so depending on a formula that relates to the losses that are borne by the insurance companies compared to the overall losses, some of the federal share may be mandatorily recouped, or in any case, the Treasury Secretary has the authority to have discretionary recoupment of the federal share after the fact. Through these reauthorizations, Congress has, as I said, moved a variety of these numbers in a way that has increased the private share of the program. And I think the third broad question that Congress has addressed is, what should the program cover and how should it be covered? Since the beginning, Tria has acted through the private sector. And I think this has been one of the strengths of the program, in that it's allowed Treasury to administer the program with a relatively small number of people. The private insurers are required to offer terrorism coverage under approximately the same terms and condition as other commercial property casualty coverage. So what this means, for example, is if you go out to insure a building against loss by fire due to an accident, the insurance company will also offer you a rider that says, do you want your building covered for loss of fire after a terrorism attack? And that's mandated to do so by the law. The consumers are not mandated to purchase this coverage. What this leads to, however, is a situation where, depending on how the private policies are written, you may have an increasingly or decreasing amount of coverage. And this comes into play especially in the role of nuclear, chemical, biological, radiological, and in the burgeoning cyber terrorist possibilities. And I will be happy to go into any further detail during the round of questions, and I will end my testimony now.
Gentleman's time has expired. I thank all of the witnesses for your testimony, and we will begin the 5-minute questioning period. This is a general question for anyone on the panel, and as Ms. Lindley Myers likely knows, and she's well aware, that the NHL Stanley Cup is touring Capitol Hill today in honor of our St. Louis Blues, who are the current champions, at least until next summer when they repeat. Can you discuss, or any of you all discuss, the importance of reinsurance in the context of large sports and entertainment events? Ms. Dinkins, you want to take a stab at that? Reinsurance of large sports and entertainment events. What's the importance of it?
Sorry, I keep doing that. So as a reinsurer, we reinsure other insurance companies. And so to the extent that our clients are insuring those events, we would follow. So, in terms of how important this is for a large sports event, I would probably defer to my primary or the broker at the table here, who would have a best position to understand how a primary company would think about that exposure. And so, John, I am going to punt a bit here to you.
Fair enough, Mr. Carter.
Yeah, I'm going to give it a try. As we talked about sports, as you know, many universities have very large sports stadiums, 110,000 people in one place, in one building, and a company like United Educators, and we are unique in that we only serve educational institutions, but a company like United Educators and its size, our assets, our surplus that we manage on behalf of schools is at a level that is adequate on the strength of the reinsurance that we purchase. So companies like AXA would stand in behind us, giving us the ability to cover more, have more capacity. But you could imagine what a terrorist event might cost if there was a really bad act with that many people in one location. So the role of reinsurance is very, very important to extend the amount of coverage that we're able to offer given the size of United Educators. And I would say any insurance carrier less than $1 billion in assets would have serious hesitation about offering this kind of coverage for that kind of an event unless there was a reinsurer standing behind it. And again, Tria plays its role behind that to ensure that we're able to talk terrorism as well as all the other risks. So hopefully that's helpful.
And as a regulator, it is concerning for us if such an event were to happen, simply because we want to make sure that the companies, reinsurance or primary, has the solvency necessary to pay any claims that might be coming from that event.
Thank you. And in keeping with that same sports theme, the Washington Nationals hosted our St. Louis Cardinals last night. We didn't really care for the results, but if one wanders anywhere near a stadium, arena, or any other entertainment venue, you're bound to see numerous vendors selling hats, water, T-shirts, and anything associated with that event. Could any of you comment on the value of having Tria to these small businesses which dot the landscape in D.C. and other cities around the country at these events? Mr. Doyle?
Thank you, Congressman. Yes, it's a critical issue to small businesses as well. As I mentioned in my prepared remarks, it's not just a big city, big employer issue. You know, first of all, I would point out that these types of events happen, other businesses can be impacted that aren't targets, right? But I would also note that workers' compensation costs are a material part of the costs of small businesses, and their inability to get coverage or their inability to get affordable coverage would seriously impact those businesses, and many wouldn't be able to continue to be in business. Now, you point out a number of different sports venues that can be targeted. Certainly, anywhere there's large concentrations of employees or large concentrations of people, right? So transportation hubs, would be another example of where there are many possibilities of impacted businesses.
What would happen in a world without Tria? Mr. Webble, anybody? Mr. Webble?
I think it's obvious, and you can see this from the past, as we've either had Tria expire or get close to expiration. Insurers start to put conditional exclusions to exclude terrorism. So there's no doubt that would happen. It already has. And you would certainly see that the take-up rates of terrorism go down. The amount of coverage that's provided in the market would go down.
Thank you. And my time is up. The gentleman from Ohio, Mr. Stivers, is recognized.
Thank you, Mr. Chairman. I'm looking forward to working with you on this very important reauthorization. The first question I've got is for Mr. Doyle, and it follows up on what the chairman just asked. In 2014, there was a temporary lapse of Tria. Can you talk about what happened then, and have you seen an increase in the so-called springing exclusions that would void coverage for terrorist attacks in the event Tria is not reauthorized?
Sure. The temporary lapse in 2014 did have an impact on the market. It was quite disruptive, and I would note that the disruption really began mid-year, which is part of why I mentioned in my prepared remarks that I would really implore all of you to act as quickly as you possibly can. So what ended up happening was businesses were struggling and scrambling to get short-term extensions. In some cases, moved their coverage to other insurers that maybe had the ability or hadn't aggregated some risk in a particular area, but it led to a lot of late-term scrambling. What I would point out, though, is that at that point, there was a fair amount of confidence that eventually the bill would be extended. So the disruption wouldn't be, I think the disruption potentially could be much worse than that, depending upon how things played out. I would also note that rating agencies are certainly watching legislative activity very, very closely, and I think are a bit more ahead of it this time. Mr. Carter mentioned.
Thank you. And I do want to thank you. That's great. Mr. Wiebel, the recoupment that happens under the current law is based on the old tax rates. And since the Tax Cut and Jobs Act took effect, doesn't that result in an over-reimbursement because of the tax rates going down?
That would be best addressed to our colleagues at CBO. As I understand how they scored it, approximately it's 140% is the recoupment amount. I believe 33% of that was for the tax that you mentioned, and then there was an addition.
So in simple math, that would mean we need to make a change to the bill to reduce the recoupment slightly to be in line with the current tax rates.
If you're wanting to make it directly budget neutral, I believe so.
Thank you. Does anybody have a concern about fixing that to account for the current tax rates? I'll take that as a no. Thank you. My next question is also for Mr. Wiebel. You alluded to, but didn't really get into, cyber terrorism. Cyber terrorism has been on the increase. The risk of that is much higher today than it ever was before. We live in an interconnected world. What would happen under Tria today with regard to a cyber terrorist attack? Is it definitely covered or maybe covered? I think the answer is maybe, but I'd like to get your...
Well, the insurance regulators, the NAIC, created a new cyber liability line in 2015, 2016. Treasury came out with guidance that clearly said insurance policies written in this line are covered under Tria. There is some liability that is excluded from Tria, professional liability, and so there was certainly question there as to where that would fall. Even if cyber liability is specifically covered under Tria, however, there's a lot of uncertainty in this line. There are a lot of policies that are being written that no one's completely sure how it's going to work out. And as I alluded to, the Tria works through these private policies. And so if conceivably there is exclusions that are applied by the private insurance companies, it may very well have damage from a cyber attack that is not covered.
So if we wanted to create more certainty, we would find some language to clarify what's going on with regard to cyber terrorism.
Yes, I think from a federal level since so much of this is state policy, state regulated policy language, it will be challenging, but yes.
Thank you. I think, those things are really important issues. The final question I've got, again for Mr. Wiebel, the cap on this program has been consistent ever since day one. The overall cap's never been increased. Is that correct?
Yes, the $100 billion, yes.
In that time, I know I'm asking you another economic question. I apologize.
That is my background.
If we were going to try to keep that consistent in real dollars, should we have increased the amount of the program over time?
For real dollars, yes.
Thank you. So, the point of my question is that the current Tria version is not perfect. We do need to actually take a little time and do a few things. I'm not asking for a long period of time, but there are real serious questions that need to be addressed. We can improve this bill. We should improve this bill and make it better. I yield back the balance of my time.
Stivers yields back the balance of this time. I recognize myself for 5 minutes. I'd like to start with Ms. Lindley Myers. We had a field hearing in Kansas City, and we appreciate your participation as well as participation of stakeholders all over. One of the issues that I have been asked by a number of my colleagues, and that is why would someone in Kansas City be as concerned about Tria as Ms. Maloney, who lives in New York. There are a lot of reasons, in addition to, I'm not going to do the baseball and football thing, but we do have two stadiums side by side in Kansas City. It's the only city in the United States with both baseball and football side by side. Chiefs and the Royals. They've cheated on us the last couple of weeks, but the point here today is that almost all of the things that would impact an East Coast city will impact a Missouri or Kansas or Oklahoma City, where we had a terrorist attack on April 19th, 1995, 168 people killed. Do you think that it is important to Missouri and the Midwest that we do this bill and do it now?
I do, and I think that terrorism can occur anywhere. So it's not an East Coast, West Coast. It can occur in the Midwest, and in fact has occurred in Oklahoma City. So I think that keeping your eye on the risk is what's the most important, because it can happen anywhere.
Today, Mr. Carter, we had a press conference to announce where we were trying to go with this legislation, and there were a number of questions about why now. Usually we get criticized for waiting until the last minute, and now we get criticized for trying to be a year ahead. What is the value of doing this legislation now, sending it, getting this committee to put it out, it goes to the floor of the Senate? Why do you think this is a good time to do it, or do you?
Thank you, Chairman. I think, given the experience we've had since 2002, meaning the amount of participation that is willing to come into this market and actually share in the risk from private markets, has encouraged this Tria bill that was enacted originally, has encouraged that activity. And I think that's a real success that this Congress has had. And I think it's something that we should continue with. We should continue on that line. Fortunately, it has not cost a whole lot of money to anybody at this point. However, its goal of bringing the private markets into market stability and allowing businesses to operate and focus on things other than the terrorism insurance that they do not have is a real win for this Congress. And so I think, given where we are and where we have been and where we are hopefully most likely to go, this makes a lot of sense to cleanly reauthorize this for 10 years and knock on wood, manage these risks as best as we can on the ground, encourage our public safety people to continue to be eyes wide open, talk to our citizens about see something, say something. But we have a system right now that is encouraging private markets to participate, and I think that's a win.
Thank you. Mr. Doyle, if we wait until the last minute, does it disadvantage insurance companies? And if so, how does the disadvantage occur? What are the problems?
With all due respect to my colleagues on the panel, I'm more concerned about my clients than the insurance companies. But and I do think they'd be disadvantaged. I think there'd be disruption in the market. I'd also note again, point out that right now we're working on insurance contracts that are incept on January 1st. They typically run for a year. That will now run into a period past the application of TRIPRA. So we'll face either short-term contracts, extensions, or insurance companies will meaningfully increase prices because they're uncertain about the backstop of the government here, or in some cases they'll withdraw from markets completely.
Thank you. The chair recognizes the gentleman, Mr. Hill from Arkansas.
Thank you, Mr. Cleaver. Thanks for convening this hearing. Look forward to working with you on these topics. Ms. Dinkins, AXA, you reinsure terror insurance in the United States? Yes?
On a limited basis.
And also in Europe?
We have some participation globally, yes.
And you'll insure up to $200 million for one risk, I think?
So I don't have that information, but I'd have to come back to you on that one.
But you do cover reinsurance for terror in Europe, since you're a French company, right? So you insure terror risk in the UK or in France?
So I would need to come back to you on that question. I don't have the information right now in terms of how much participation we have in the rest of the world on terrorism.
Well, I'm curious because I think this committee is very, very interested in how other countries handle this exact problem. So I think if you could respond in writing in the UK and France, that would be, I think, very helpful.
I will do that.
Thank you. Mr. Doyle, you want to comment on that from Marsh's point of view?
Sure. There are various schemes. Most Western economies have various features. What I think is that the program we have here is a bit unique, and in our opinion is a model program in the way it's structured. I don't consider it really reinsurance. It's really a risk financing mechanism. It's a post-event risk financing mechanism. There's broad insurance industry participation through deductibles, co-insurance, and then an industry-wide deductible requirement. And then, of course, the Treasury has the ability to recoup losses afterwards. And so, to me, as I look at the various schemes and pools around the world, this is a very effective mechanism to manage the risk relative to other.
Yeah, so from your point of view, this idea of recouping on the back end versus paying premiums on the front end like they do in the United Kingdom, that's not a major structural challenge for you?
I think it's more efficient from a capital point of view. You don't have to project what type of event it's going to be. And again, to me, it's a way to allow, at least for economic recovery, to happen as quickly as possible.
Mm-hmm. Appreciate that. And on the renewal question that all of you have touched on in terms of the date, I don't know that it's realistic that we would reauthorize this program before January 1st. I'm sorry, Ms. Lindsay Myers, on that. I'm not sure that can happen. That would be light speed by Congress's standards. But certainly on our side of the aisle, we've urged the chair of the committee to have this hearing all year, so we're delighted that we're having a hearing before year end on the potential reauthorization so that we can get that train moving. But is there, I mean, you can say you don't want the reauthorization done on the day before it expires, that's true, but is there some dates you really would, in the brokerage community, urge that it be done by, say, June 30th, 6 months before expiration? I mean, there's no wrong answer or right answer to that question, but there's also, you've got to be realistic too.
Yeah, obviously, the sooner the better, right? I think, you can come up with lots of different scenarios. So going back to Chairman Weaver's scenario in his home state, if the Royals renew their coverage before the Chiefs, is there going to be private capital that's going to be willing to support the Chiefs? And that's the practical issue that we begin to run into as the year wears on. Risk begins to aggregate on insurers' balance sheets. Regulators, rating agencies begin to step in and create pressure. And those own insurance companies, through their risk management functions, begin to be quite concerned about the aggregation of risk on their balance sheets.
That's helpful. Mr. Wable, in Section 103 of the current bill, it discusses insurance marketplace aggregate retention amounts. And in 2015, the reauthorization revised the amount from a static figure to a rolling 3-year average based on the industry's collective deductibles, roughly $37.5 billion. What's been the impact over the past 5 years of this increase in the aggregate retention amount, and has the pricing availability for reinsurance for policyholders changed as a result? Sort of like Mr. Stiver's question on the aggregate amount, but on that rolling price change. What are your views on that?
I mean, I would defer to those in the marketplace more closely, but in general, when you look at the figures that have come out from Treasury recently, it's difficult to say because we don't have as good of metrics over the entire life of the program. There was a data call mandated in the last reauthorization that provides the deepest look at the market that we've had. Before that, we had surveys by Marsh, which are good, but are not necessarily covering the whole market.
So would you say that that's something we ought to look at closely before we reauthorize this measure?
I mean, I think that from the numbers we have, I don't know that you can tease out a direct problem with or impact of what was done.
Good. Thank you. I yield back, Mr. Chairman.
If I could do one aside, just for Mr. Stivers, quick back of the envelope, the $100 billion from CAP goes to about 140 in real dollars.
Thank you.
Or in current dollars.
The gentlewoman from Ohio, Ms. Beatty, is recognized for 5 minutes.
Thank you, Mr. Chairman, and to our witnesses, thank you. Sorry I missed part of it, but I have 2 committees like many of us at the same time. But I want to thank you for being here today. And I have 2 questions I'm going to try to get through, Mr. Chairman, quickly. The first one, let's start with you, Mr. Doyle, and then anybody on the panel can jump in. Earlier this year, I was in my district, and I heard from some of my constituents that run places of worship in religious not-for-profits, like churches, synagogues, community centers, et cetera. My colleague already talked about the Ohio State University that's in my district. Sorry that Congressman Stivers is not here to hear that. Oh, I didn't see. I was only saying that because he was blocked. But with the rise of terrorists and the lone wolf attacks around the country on places of worship, many of them, if they had not already purchased terrorism insurance and active assailment coverage as part of their property and casualty policies, what I heard from them was they were concerned with the cost of these policies and feeling like they now have to purchase these policies to keep their members safe and to assure them from any attack. Well, according to Marsh's 2019 Terrorism Risk Insurance Report, and it's on page 9, public entities and not-for-profit organizations take up rates that are 66% with only 3% of the premiums going to terrorism insurance. Is that data broken down further into subcategories only account for places of worship and religious not-for-profits? And I'm asking this, are there grants available, or what do I go back and tell them in relationship to their insurance policies?
Sure, and I'll be watching your Buckeyes on Friday night in Chicago. So, you know, the coverage isn't, other than in workers' compensation, right? So I think our report refers to property coverage and TRIPRA in property policies. That's not required to be purchased. So, a place of worship certainly doesn't need to buy it. We certainly, as risk advisors, advise clients of those types to buy it for the reasons that you mentioned. And candidly, I think a 3% price, although again, I don't price the risk. We advise clients to do it. When it's 3%, we advocate strongly on behalf, given some of the active assailant matters that you mentioned earlier.
Okay, let me go because of the time. Mr. Carter, let me ask you, since I've already introduced the Ohio State University, and as Congressman Stivers said, you can find at any time some 100,000 Ohioans and others in the shoe or in the football stadium. Mr. Carter, can you discuss how important it is for universities like the Ohio State University and others to have terrorism risk insurance program reauthorized in a timely fashion? And what could be some of the effects if we wait too long to reauthorize the program, or worst case scenarios for the program to expire?
Thank you, Congresswoman. I would say, as institutions are thinking about how spread out they are and how many things that they're really thinking about, it's more than just the stadiums. The stadiums are a big part of it, but they're thinking about dormitories at the Ohio State University that go up 50 stories, and they're thinking about how many students have to get moved in certain ways as they pre-plan for and go through their whole exercises to keep things safe. And all the other activities in and around a campus, whether it's habitational, whether it's entertainment, whether it's athletic, it's employment, all kinds of issues, they're going to rely on companies like United Educators to help them secure that coverage in advance. And United Educators, as an underwriter, is taking a hard look at all of that, including more than that, to say, what is the price? What are the terms that we can sustain? Terrorism insurance is just one thing. So if we are spending a lot of time on something that is very, very remote in terms of its possibility, you could imagine taking something that we're doing that takes a while, takes a good while to think about a campus like Ohio State University, 50, 60,000 students and all of its activities, underwrite that, put a number on that, but then we go to a company like AXA and we're asking them, can you participate to extend our ability to write more for the Ohio State University? So it takes time. It is not something that if Congress decides, we can sit on this for a while and we can wait to the last minute, and they come in, a week before Ohio State's renewal, it doesn't give us enough time. So we put exclusions out in place,
Okay.
and that's the reality.
He's tapping to tell me my time is up. Thank you, Mr. Chairman, and thank you, Mr. Carter. Maybe we can talk later.
Woman's time is up. The chair recognizes Mr. Luke Tomorrow from Missouri. 5 minutes.
Thank you, Mr. Chairman. My question is for just anybody on the panel who wants to reply to it. But currently, there's no deadline under which the Treasury Secretary must determine whether an event is an act of terrorism or not, and therefore would trigger Tria, is my understanding. Do you think we should consider putting a provision in a reauthorization that provides a window of time under which the Secretary must make certification? Does anybody like to answer that? Or am I incorrect in my assumption? Anybody?
This largely came about or was highlighted after the Boston Marathon bombings in 2013, where there was a lot of uncertainty regarding the certification, because this was really the first real sort of terrorist attack that we had when the program was in place. And the issue there was largely the relatively low amount of damages. The insured damages from the Massachusetts Department estimates came up to around $2.5 million, which meant that you have a $5 million minimum certification, which means effectively Treasury could not certify under the law. I think it's going to be an issue regardless of what you do with the certification number, because the insurance departments are always going to take some time to try to develop the losses. If it's obviously well above whatever number is there, 5 million, then it probably gets easier for them, because as soon as the losses pass that number, Treasury can certify. And so it's difficult, and I understand why Treasury in the last round and in the guidance or in the study that they put out said we don't want an absolute number from their perspective, but it certainly puts the insurers in a difficult situation, because there's policy language that references certification. And so they're sort of caught in a limbo of saying, we don't know for sure what's going to apply because to pay people claims, because we're waiting on certification to know what policies apply.
Anybody else want to comment on that?
So I would just add to that as a real-life example, and being a claims person, I've know firsthand what's necessary or what's important to pay our clients. And I would say for the RAA, we don't have any recommendations around timing, but as soon as that decision can be made, the better. Because for insurance companies, particularly claims people, when we have to adjust losses, we have to know which bucket it falls within, because the coverage and your ability to respond to your clients in a timely manner comes off the fact that you know which coverage it applies. And so to the extent that that's not decided for a long time, that affects our ability to make the decision fast and put our clients back on their feet.
Thank you for that. Ms. Dawkins, in your testimony, the last page of your testimony, you have a graph there that is a very good depiction of the transition from the private sector, or from the government taking the risk with Tria, to the private sector taking over some of the risk, and it goes from 2003, where we start out at $20 billion, and the graphic ends at 2040, whenever the government has relinquished all but, or the private sector now is at $90 billion. And so I guess my question is this, and we've talked about it a little bit in a couple of other questions, or is this transition, do you feel that it is adequately stated at this point? And with the addition, I don't think in 2003 we thought about cyber or some other perhaps types of attacks. With taking that into consideration, is this something that needs to be adjusted?
So that graph actually came from the REA, so it's part of my statement or my testimony. And the graphic is intended to show just over time how, with the changes or the
Right.
reforms.
But that was not taking, I don't think anyway, that we took into account back then, cyber. So if that's an additional type of terrorism risk that's being taken, should we think in different terms here? Should we adjust the number of years? Should we adjust the amount of money? Should we make any adjustments? This is the reason for the hearing, to find out we need to make adjustments. What do you think? Is that a legitimate question?
So we would not support any changes to the program as it stands.
Okay, even though you're taking on more risk?
Are we taking on more risk? Sorry.
Yeah. You're taking more risk with additional cyber, are we not?
So cyber is one of the issues that I think has been decided is covered under the program, and how cyber works and the impact of it, I think, is something that we are still reviewing.
Okay, all right, thank you. I would.
The gentleman from New Jersey, Mr. Gottemeyer, is recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate it, and I want to thank all the witnesses who are here today. As you all know, the September 11th, 2001 attacks on the United States were not only a declaration of war on the American people, but also on our fundamental ideals of freedom and liberty. Nearly 3,000 souls were lost that morning, including more than 400 firefighters, police, and other first responders, and nearly 700 in New Jersey who ran in to help. These attacks also resulted in estimated insurance losses of more than $45 billion, the largest insured losses from a non-natural disaster on record. While the losses for primary insurance companies were great, the heaviest losses were incurred by the reinsurance industry. Ms. Dinkins, can you help us understand why reinsurance companies face such a large exposure to these losses and what the impact was for your company in the immediate aftermath of 9/11?
Thank you. So for reinsurance served its purpose in that we provide financial support when there is a large event, and we're there to pick up losses that are infrequent but severe. So the reinsurance industry paid about 2/3 of the 9/11 loss, and that is reinsurance works effectively in that we are there to pick up those losses when they are large and when they're infrequent.
Thank you so much, Ms. Dinkins. Shortly after 9/11, terrorism risk insurance became unavailable, as you all know, or extremely unaffordable. This had important and significant ripple effects across the local economy, including my home district of the 5th District of New Jersey, right outside New York City, and it affected it in a way that hindered recovery efforts. Thankfully, Congress passed Tria, which established the first federal backstop for terrorism risk insurance and helped insurers offer it affordably nationwide. Mr. Doyle, if I can ask you a question, sir. Can you help us understand why the affordability and availability of terrorism risk insurance is just so important to the broader economy? Thank you.
Thank you, Congressman. It's absolutely critical to our clients to have the confidence and stability to invest in their future and I think into our country's economic future, to have this program stand behind them. For somebody who was working in Lower Manhattan in 2001 and in the insurance industry, I can speak firsthand for how it froze up things, not just from an insurance perspective, but also liquidity became a major challenge. We talked about some of the compulsory elements of workers' compensation, the impact of business interruption today, but we didn't talk at all about lenders requiring there to be terrorism coverage. So there's so many different aspects of how it supports the economy and how it can support a quick recovery from an event that none of us wants to have.
And obviously, timely reauthorization is particularly important to the economy and to my district, where there's a high population density, important cultural centers and landmarks, and major infrastructure, including bridges and tunnels and rail and highways, which is why I was so proud to be an original co-sponsor of the Chairwoman's legislation to fully reauthorize to 2030 and urge its immediate passage. To that point, Mr. Doyle, what do you think the consequences of letting Tria expire are for high target states like New Jersey, and what would the impact be?
Cost and availability of coverage will rise significantly. I would also note that I think for the first time where the program has come up for an extension, we're in a period of rising prices in the insurance market as well. Broadly speaking, the insurance market prices have been coming down or flat to been down for a long period of time, and returns have not been good to insurance companies. So right now, there's a withdrawal of capacity in the market overall, and prices are increasing as well. And so I think we'll see a more significant reaction from the insurers taking the risk today.
Thank you, Mr. Doyle. Madam Director, do you agree with that assessment?
I do agree that the prices have been coming down. I think when you don't have a program such as Tria, it does create a sense of disruption, instability. people don't really know kind of where to go, what to do, and the more, I'd say, you know, the better that you have this sort of platform there, the better it is for consumers.
Excellent. Thank you. I yield back. Thank you so much, Mr. Chairman. Thank you.
Gentleman yields back. Gentleman from Michigan, Mr. Huizinga, is recognized for 5 minutes.
Thank you, Mr. Chairman, and right up over here. So Section 101B of Tria, the statute states, quote, "The purpose of this title is to establish a temporary federal program that provides for a transparent system of shared public and private compensation for insured losses resulting from acts of terrorism," close quote. Well, that was 17 years ago. We are on the cusp of a fourth reauthorization on this. And I guess I have a question. What is the definition of temporary? I know there's Washington definitions of temporary, which means maybe forever. But should we put this into plain English and remove the word temporary? Or is there some value in having this in there? And or maybe more important, should we be discussing a period of time, a shorter period of time? You know, at the time, my recollection is industry had said that they needed this temporary coverage while the industry got together and kind of got its footing and its bearings under it and figured out a path forward. So is that impossible? So I'm curious, any comments?
You know, I think we discussed a bit earlier about, you know, the inability to model the risk and the ever-evolving risk as well. And, you know, I think it's fortunate that we don't have a lot of data in the industry.
So, but is it impossible to model this risk?
I think it's very, very difficult. I mean,
first
of all, it's not a fortuitous event, right? Many are impacted that aren't targeted, and it's quite easy. We talked about, you know.
But we're able to model natural disasters. We're able to model even conflicts of other type, man-made conflicts. Is it just impossible to model this?
I think
Mr. Carter, you look like you're wanting to lean into this.
It's incredibly difficult. Again, I think it's important to the stability of the economy to have an extension. I certainly support the extension for a 10-year period. At the same time, I think it's also important for the Treasury to have the ability to have guidance. So we talked about cyber risk not being contemplated earlier.
Maybe real quickly, I want to hear from CRS. Any thoughts on temporary?
Basically, temporary is what Congress says it is. As a user of the statute, it is interesting to me that, for example, it is tucked in the note of a different section so that it doesn't even have its own title. If it is going to be there, again, as a user of the statute, it would probably be nice to have it in its own section.
Well, it doesn't give me a whole lot of good feelings, but I mean, I think that is one of the questions we need to have is does this not just become policy? And, you know, and whether we keep the word temporary in there or not, or do we just need to call the spade here on this? I'm going to move on a little bit, though, to a report from the Treasury Department. In June of 2018, they performed an industry-wide data call to determine the amount of premiums earned by insurers on terrorism risk insurance since January of 2003. In that report, Treasury estimated that approximately $35.6 billion in terrorism risk insurance premiums had been earned by insurers between 2003 and 2017, which exceeds the industry documented $27.125 billion in insured property losses from the September 11 attacks. How has industry used these premiums to reduce the insured loss risk of future terrorism asks or build capacity to absorb any future losses? Anyone? What's happened with the money?
Well, I didn't get the money.
And to quote the great philosopher, with the rents too damn high in New York, there's a lot of people that believe that the premiums are too high. And if we're talking about affordability and we're talking about nonprofits or entities that are out there that are needing to have access to this, What is the industry doing about that?
So as an advisor and not a risk taker, we're not collecting those premiums to be sure. But I would also note that the cost of terrorism insurance has come down over a period of time. And the industry, both on the intermediary side as well as the risk takers, through both pricing and terms and conditions and through other risk management techniques, continues to invest in hardening infrastructure and advising clients, whether it's sports stadiums, real estate, big employers in urban centers, or houses of worship, as we talked about before, and some of the steps that they can take to create a safer environment.
I know I'm over my time, but anybody else? I mean, it seems to me if one of our goals is to have access, we need to make sure that that access is available, that insurance isn't just there, but it's affordable. So I know my time has expired, so we'll follow up later. Thank you.
Thank you. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank all the panelists this afternoon. A couple of questions. I'd like to begin with Mr. Carter. Data shows that educational institutions have the highest take-up rates for terrorism risk insurance coverage. From daycare centers to college campuses, Tria helps provide affordable terrorism risk insurance coverage for a wide range of educational institutions. Can you please elaborate on Tria's relevance to the education sector in particular? I know there was a related question earlier.
Yes, thank you, Congressman. Educational institutions, as I mentioned in my opening remarks, are soft targets, and they're really icons of America. So it's very easy to see where perhaps an outsider or even someone who wanted to do harm might look at an educational institution with all of its architecture and actually see that as a target. But taking that a step further, on those campuses and those who manage those campuses are really worried about, and they do a great job to their credit in thinking about all the things that need to be covered in and around a campus. You have employees, you have obviously adult community all around, you have young adults a lot of times learning, sometimes you have minors. And so they have to think very deeply about all of this and where are these people at certain times, and you have the entertainment elements that we talked about. So yes, they are large buyers of terrorism insurance. They recognize that if they don't, there's probably, there's a negligence around just not buying it, given that they are the targets that they are. But I think that demand is not soon to go away. I think they're clearly worried about it, and to the extent that Tria would go away, companies like United Educators and many others of its size would have to think long and hard about the terms and conditions we could put in policies, because the balance sheet just wouldn't support what they need.
Thank you. So is it fair to speculate that in the absence of Tria, the pressures on universities to find other insurance would increase tuition costs?
That's fair, very fair. And when you just think generally in aggregate, it is very good for consumers, and yes, including education institutions, to have more options for coverage, more participation. And the great thing about Tria, as I mentioned before, is it is encouraging private markets to participate in a very complex problem. That's good for consumers, that's good for small businesses, and that's good for educational institutions.
Okay. Thank you. Mr. Chairman, last week the firm Aon released a report detailing how terrorist threats and risks have changed and evolved since the September 11th attacks, in particular highlighting cyber terrorism as a risk deserving close attention. Mr. Chairman, I would like to request that this report be entered into the record.
Without objection.
And finally, for Ms. Lindsay Myers and Mr. Doyle, according to the Center for Strategic and International Studies, since the beginning of 2019, there have been 70 significant cyber incidents globally on government agencies, defense, and high-tech companies. economic crimes with losses of more than $1 million. Cyber threats are becoming more advanced, and the nature of cyber incidents has shifted from primarily affecting consumers to having an impact on global political or economic systems. As industries more critical infrastructure online, they are increasingly vulnerable to the potential for cyber terrorism. Does Tria appropriately account for these evolving risks in your estimation?
I'll go first. I think that in Tria, there is a sense of cybersecurity is a covered offense, but you got to be able to get to the mark that is in that Treasury has set for it. And if you don't, if it's just at $1 million, it doesn't hit the threshold.
We certainly supported the Treasury's guidance in 2016. Baird mentioned some of the complexities in the underlying policies that they need to cover cyber risk. But as you mentioned, cyber risk continues to evolve. It's on the top of the list of risks that our clients are concerned about. So we certainly support TRIPRA's inclusion of cyber. It's absolutely fundamental to the development of the cyber insurance market.
Thank you. Mr. Chair, I yield back.
The gentleman yields back. The gentleman from Oklahoma, Mr. Lucas, is recognized for 5 minutes.
Thank you, Mr. Chairman, and I want to start by underscoring how important it is that we reauthorize Tria to protect the federal backstop for terrorism risk insurance. And also, Mr. Chairman, want to express to you my appreciation for remembering the tragedy that was the Murrah bombing in 1995. In those days in Oklahoma, we had 6 congressional districts, not 5. And as a member of 11 months, I'd been elected in a special election in 1994. My office was a block and a half away from the Murrah building. Even after all this time, I still have an intensity in my heart every time the topic comes up. Those perpetrators who worked so diligently to take away 168 of my fellow Oklahomans, many of them who were my constituents, many of whom were our fellow federal workers, who injured hundreds more. The way that they created that truck bomb was designed to create maximum destruction. Now, I know my colleagues from New York and those who represent the countryside in Pennsylvania and those who represent the good folks who worked at the Pentagon and in the District of Columbia area. I know you understand the magnitude of these experiences. But in the aftermath of Murrah, we made the decision as a Congress, as a federal government, that when an entity or the sickest of minds chose to attack our fellow federal employees or chose to attack our fellow citizens, that we could not let that go unanswered from an economic perspective. And in the aftermath, of course, of the attack on the World Trade Center, Congress recognized the difficulty for the markets to ensure and to assess the potential for major terror attacks and created Tria. I wish that we lived in a world where Tria was not necessary, but has been demonstrated time and time again since 1994, it is necessary. And we have a responsibility to our fellow citizens to make sure that things like this continue to work effectively and be in place. So with that, Mr. Carter, I know my colleagues have asked a good many questions of the entire panel. In your testimony, you explain how United Educators is looking at steps that would be needed if Tria were allowed to lapse. Thinking about what I saw in 1995 in Oklahoma City before there was a Tria, thinking about what we've seen from New York City and the tragedies of 9/11 forward, could you expand on these steps, please?
Well, and thank you for the question. In that testimony, what we would be looking at and what I was referring to is as we offer renewals to educational institutions and communities like Oklahoma and all around the United States, we would have to think long and hard about what we put in place with regard to terrorism acts. what makes terrorism so hard to model, everything that we do, we can look at some data and we can look at events and try to figure, okay, it's going to happen this amount of times over some number of years, and it's going to cost some average severity, and you put a price around that to try to make this work. What we're talking about here, though, is the most unpredictable minds. You're really trying to find a number, put a number on people who are working really, really hard to be unpredictable. Whether, so city one time, we're not going to go to the city next time. We're going to go to the rural areas the next time. So that makes it very, very difficult to model. A company like United Educators, and we do very good work. You heard some of my comments about how many institutions rely on United Educators for all the things that they do. But companies like United Educators and smaller mutual insurance companies could not put out the kinds of limits that we put out today in the absence of good reinsurance participation and Tria. Tria enables all of that. So it's really a partnership that is making America, that's keeping things moving in a world where we have really that risk that we can't see.
Absolutely, Mr. Carter. And I would conclude by noting to my colleagues, whether you were here in 1995 in the aftermath of Murrah or here in 2001 in the aftermath of the World Trade Center attack, when something of that magnitude occurs, we will respond. We have an obligation to our fellow Americans. We will respond. Let's be rational about how we plan for and prepare to deal with these situations. We will respond. We have a moral obligation, and we've demonstrated that time and time again. Yield back, Mr. Chairman.
Gentleman's time expires. The chair recognizes the gentlewoman from California, the chair of the Financial Services Committee, for such time as she may consume.
Thank you very much. Congressman Cleaver, I want to thank you and Congressman Clay for the work that you have done on Tria. The last time we reauthorized the Terrorism Risk Insurance Program, Congress required Treasury to conduct a study and report to Congress on the effectiveness of the program so that we could provide further reforms if necessary. Last year, Treasury provided that report, finding that Tria is in fact working as Congress intended to ensure that terrorism risk insurance is available and affordable. Stakeholders overwhelmingly agree with this finding. In fact, over 300 stakeholders joined in a letter to Congress supporting a clean, long-term reauthorization of Tria. That is why, just last week, I, along with several of my colleagues on this committee, introduced a bipartisan bill to provide a 10-year clean extension of the Terrorism Risk Insurance Program. So I would like to ask all of the witnesses that are here today, let us know, raise your hand if you agree that Tria is largely working as Congress intended. Led by Ms. Maloney. Thank you. I would also like all of the witnesses to again raise your hand if you agree that we would likely see significant market disruptions if Congress allowed Tria to lapse. Thank you. It is clear that there is overwhelming agreement that Tria is working and that Congress should reauthorize it in a timely manner, and I intend to work to do just that. And so, Ms. Lindley, and Myers, and Mr. Carter, when a program is working effectively, it can be easy to overlook its importance. For example, because Tria is working effectively, many people don't even know what it does or why it is important. In particular, many people do not understand why terrorism risk insurance is important outside of densely populated urban areas like Los Angeles or New York cities. Can you just take a moment and help us to understand why all members of Congress should care about the timely reauthorization of Tria and not just those who represent densely populated urban areas? For example, doesn't a university need terrorism risk insurance regardless of whether it is located in Missouri or California?
I'll start off, Congresswoman. Tria is needed to get rid of the instability, the disruption of the marketplace. terrorism or the terrorism risk exists all across this country, not just in the urban areas, but indeed in the rural areas and definitely in the Midwest. So the insurance regulators support the extension of Tria because we want to not have the uncertainty, to not have the instability or the disruption in the marketplace.
Thank you. Mr. Carter?
Thank you for the question. As universities go, their locations range from large cities, as you mentioned, but also many of them, a very large amount of them, are in places like Norman, Oklahoma, or Lincoln, Nebraska, and very lightly populated areas. They just have significant campus presence in those areas. They are very worried about the risk because of the concentration and the targets that they represent. So Tria is so important to them. And by the way, I will remind you that of these 1,600 schools, colleges, and universities, and that also includes a large number of public school districts across the United States. Of the 1,600 of them, all, if not, nearly all, if not all, have taken the Tria endorsement. And it's an optional endorsement, but almost everyone, if not everyone, has elected to cover themselves through that optional Tria endorsement that we offer. And we can only offer that because of the Tria program. So hopefully that answers your question.
That does, and I want to thank you for your presence here today, all of you who are here as witnesses. And again, I want to thank the leadership that has been provided by many of our members here and the cooperation that we have from both sides of the aisle. You know, a lot of good public policy gets bogged down in bureaucracy oftentimes. I think we're on the verge of having the opportunity to pass a long-term 10-year reauthorization. I think that's how the Senate is thinking about this, a clean bill that does not get bogged down. And so I'm very optimistic that we're going to be able to do what we need to do to ensure that the insurance companies can handle the risk with the support of their government and with Treasury, et cetera. And I thank you for being here today. And I thank Mr. Cleaver, and I want to thank Mr. Clay for this hearing. Thank you so very much.
Thank you, Madam Chair. Mr. Tipton from Colorado is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank the panel for taking time to be able to be here. I associate myself with Mr. Lucas's remarks from the standpoint that we will because we must in regards to Tria, but we do need to make sure that we've got the resources to be able to follow through as well. And Ms. Lindley Myers, you'd noted in terms of the repayment provisions, and in Section 103 of the Tria statute, it does outline that under the program, the first 4 years of the program must be recouped before the end of the 5th year, and any federal payments made in years 6 and 10 of the program must be recouped before the end of the 10th year. Assuming we did have an event that triggered Tria, and we had a significant amount of federal dollars and payments that were going into the program, would policymakers be prepared for the assessments required to be able to comply with mandatory recoupment provisions that are in Tria?
Yes. Generally speaking, when the insurance regulators look at the solvency, the financial stability of the companies that are selling these types of products, and assure ourselves that the incidents are not only insured but also reinsured securely, then we know that that all of the perils, not only things that might be associated with Tria or a terrorist act, will be covered. And so that is one of the things that we look at as an insurance regulator.
Great, and I appreciate that. And the only reason I want to drill down on this is it was a little bit arbitrary when it was first put in terms of the provisions that were coming in. But if you had an event and then the possibility of an event that could happen in year 4 or 9 of the recoupment period, does that raise any concerns for you?
generally, when we're talking to the companies, and not only me, but members of my staff, members of any insurance department, we look to them for the modeling as to how they can remain solvent and make sure that the policies will be able to pay should an event occur.
Okay. Thank you. And Mr. Wabel, you have any thoughts on that?
Yeah, I think that one thing that's important to consider is that the recoupment provisions are basically seen as a levy on essentially the policies going forward, and would look probably much like the premium taxes that the states apply right now. So that who exactly paid that is a complicated economic question, but a significant part of it would probably be borne by the policyholders purchasing property casualty insurance going forward. If you look at the impact of a large scale recoupment in the very short period of time that you mentioned on the policyholders, it does seem likely that there will be some adjustment going forward by a future Congress at the time, because I think that it's probably no secret for those who have followed it that these provisions are largely put in around a CBO scoring window of 10 years. And of course, that 10-year window would get pushed out the further you go into the program if you are passing a whole new bill. It would be 10 years essentially from that bill, when that bill was passed, if it were an emergency supplemental after a terrorist attack, rather than 10 years after the original reauthorization of Tria.
If I'm following you correctly, it might be a little more sensible if you were to make an adjustment to be able to have it from the event, per event, and to be able to extend that out. Is that what you're indicating?
From an economic perspective, I think that is true.
Okay, thanks. And, in the report that was released in June of 2018 on the effectiveness of the Terrorism Risk Insurance Program, it noted that approximately $35.6 billion in terrorism risk insurance premiums have been earned by insurers between 2003 and 2017. That did exceed the approximately $27 billion in insured property losses from the September 11th attacks. Does anybody have any idea, Mr. Doyle, in terms of how those dollars were being used to be able to reduce the insured loss risk for future terrorism acts, or possibly to be able to build upon the capacity to absorb future losses?
Thank you for the question. Again, I'm a risk advisor, so not collecting those premiums and
Sure.
And managing the cash flow from that. But much like any other non-frequent but severe potential events, wind, fire, flood, in the course of years, and policyholders don't hope to recoup and make a claim for those types of events. So I'm sure those premiums were used to cover other losses that were incurred that weren't priced adequately for in those years.
Okay, thanks. My time's expired. Yield back, Chair.
The gentleman from Texas, Mr. Green, who is also the chair of the Subcommittee on Oversight and Investigations, is recognized for 5 minutes.
Thank you, Madam Chair. I thank the witnesses for appearing today, and I'm especially pleased that you seem to be in agreement that we should extend this terrorism insurance that we have worked so hard on, so thank you very much. I'd like to speak for just a moment about H.R. 4523, and Mr. Carter, if I may, I'd like to address my concerns to you. As you know, small and mid-sized 501c3s, not-for-profits, are allowed to acquire their liability insurance through risk retention groups if they have similar circumstances. And you probably are aware that due to market consolidations, the insurance market is not such that they can get some of the other needs that they have. More specifically, I'm talking now about the auto insurance and property insurance. These markets have sort of dried up. So H.R. 4523 would allow these groups to obtain their property and auto insurance coverage from their risk retention group. Currently, the law doesn't permit it. And my question to you is, do you see the benefits that can inure to these 501c3s by opening up this process to the risk retention groups for the purpose of acquiring the property insurance?
Thank you, Congressman. I'm going to answer that question as an executive of United Educators, a risk retention group, and this is a separate, and this is not the position of the American Property Casualty Insurance Association. This is my answer to your question. As you may know, 4 or 5 years I testified on behalf of risk retention groups having the ability to offer property, limited forms of property to their constituents. Risk retention groups are only able to work with one type of client, one industry, and only in the United States of America. So there's a lot of limitations around that, and they can only do liability. So that work and that testimony set the record and set my position that I believe if a risk retention group has a certain amount of seasoning, a certain amount of years in business, and a certain amount of capacity, they could do a very good job for that industry, that dedicated industry, just as they do for liability, they could do limited forms of property. So to answer your question, on behalf of United Educators, we would support that expansion. However, it's my understanding, and I haven't seen the bill, but it's my understanding, certainly we haven't been approached on the bill, that education is not necessarily a part of it, but we would certainly support it. Now, again, back to the testimony today is really on behalf of APCIA, but that's my opinion, sir.
Well, I thank you very much for your considerate opinion, my hope is that we'll be able to provide this because a lot of not-for-profits are having difficulty acquiring property insurance, and that creates a great concern. What are some of the concerns that are created by virtue of the inability to acquire this property insurance, if you would, please?
Well, in the market today, and again, I'll speak in general terms. First of all, I've mentioned earlier that the more market participation you have encourages competition, and I believe that's good for the consumer, the buyers of insurance. So the minute you start eliminating or removing competition from that, you reduce capacity, you reduce options, and what you're referring to is probably in and around the state of Texas. We also see it in California since they've had some issues with wildfires. We're seeing it in Colorado where auto is very, very difficult. There are a lot of the industry that's having trouble offering quotes, offering capacity, and I believe those risk retention groups that are focused on their individual industries are in a position to actually price that risk and price it appropriately for stability down the line. But that is really the market issue. The market issue is, in and around Texas, how many of your constituents are having trouble getting quotes?
Thank you. I yield back.
The gentleman from North Carolina, our ranking member, Mr. Mchenry, is recognized for 5 minutes.
Well, thank you. Thanks for yielding. So I would ask this to the whole panel and see if I could get a response on this. Section 102 of the Tria statute states that for an event to be certified as an act of terrorism by the Treasury Secretary under the program must be among other criteria, quote, a violent act or an act that is dangerous to 1, human life, 2, property, or 3, infrastructure. So based off that definition within the act, could you all, any of you give me an example of something that would be an act of terror that may not meet the violent or dangerous threshold?
The one thing that comes to mind, since particularly it's been a topic, is a cyber terrorist act.
Anybody disagree with that on the panel?
Depending on what it was.
Okay. Ms. Dinkins?
I would agree with that. That would be the example that I'd raise, that it is cyber that would be nonviolent. And we believe that the program as written is broad enough to cover, both violent and nonviolent definitions of terrorism.
Okay.
I mean, for example, is someone graffiti spray painting a wall a violent act? It might be an act of dangerous to property. It really would come down to a future Secretary of the Treasury and how he or she wanted to interpret that statute.
Okay. So along those lines, Ms. Dinkins, the reinsurance marketplace was had the largest exposure after as a result of the 9/11 attacks. Has your industry done studies on the effects of a large-scale cyber attack?
We have not done a study. Well, the AXA-XL has not done a study, but as I understand it, the GAO is doing a study now on cyber, how it would work in terms of an attack. I couldn't answer that question, but my understanding is there's a study going on right now.
Mr. Doyle?
Cyber risk modeling is at a very nascent stage, so the private market is working really aggressively to try to stay ahead of the evolving risk. As you know, it's gone from personally identifiable information to now risks of critical infrastructure. I do think it's critical, and we certainly supported the Treasury's guidance in 2016 on cyber, and it's critical that cyber's very well contemplated in an extension.
Well, it's interesting because in terms of the act, there is not there's not the word cyber in the actual Tria Act. And I think this is, given the nature of cyber attacks right now, I think we should have a more robust response than Treasury guidance in the hope that a Treasury Secretary will do a responsible thing if there's an unforeseen major cyber attack. So along those lines, Mr. Wable, Tria doesn't address the cyber insurance directly in the statute, right? So we talked about this, the guidance that's come out of Treasury, but fast forward now to this day, we have, massive data breaches that occur on a regular basis among the most sophisticated corporate actors around the globe. We've seen the Russians and other state actors perpetrate acts in the last 5 years that weren't contemplated outside of science fiction novels. So this risk is decidedly different. Is there grounds for Congress to legislate to ensure that cyber is a part of Tria in a more fulsome way?
I mean, it's certainly possible. The cyber is an interesting example of how the flexibility of the act, the way that it works through private policies, allows essentially coverage going forward for things that weren't contemplated when the act was produced. But in doing that, you're depending essentially on the private insurance policies to develop that coverage and for people to purchase them. And so there's no reason if a private policy covers cyber that Tria doesn't cover cyber. But it's such a new and evolving sense of what the policy language is that nobody, even the ones selling or purchasing the cyber policies, are 100% certain whether any of the examples would actually be covered. If
anybody on the panel disagree with the statement?
There are policies that have affirmative cyber coverage in them, and then there are policies throughout the market that are silent on cyber, like Tria originally was.
And it also depends, I would say, on the magnitude or impact of the cyber attack.
I think it's important to note, and that's why I raised it in my questions. Thank you for your testimony. I think it's clear that the dials are about right in terms of property casualty, but I think there is grounds for us to have a deeper conversation when it comes to cyber, and I thank the chair.
The gentlewoman from New York, Ms. Maloney, who is also the chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is recognized for 5 minutes.
Thank you so much, Chair. I also want to thank Chair Cleaver and Clay for their work on this, and Chair of the committee, Maxine Waters, who has put forward a bill that I'm supporting that is a 10-year extension, that it builds on the successful bill that has been before us for a number of years. But I really want to express how important Tria is to me. I represent New York City. I think it's critical to New York. It's critical to our economy. Actually, it's critical to the whole country because God forbid that we have another terrorist attack. It's going to disrupt everything. It's going to be a horrible experience. And we know the federal government will come in and help that locality out. We might as well have a framework that works, that's tested before us. I know painfully from the experience after 9/11, insurers realized that they couldn't accurately model for terrorist risks. It was simply too unpredictable. They didn't have the information to accurately predict where a terrorist attack is most likely to happen or how likely it is to occur, and all of that information is classified as well it should be. So the result was that in New York, all buildings stopped. The market for terrorism insurance completely shut down, and without terrorism insurance, all construction stopped, thousands of jobs were lost, the economy came to a standstill, and in response, Congress, in a bipartisan way, passed the Terrorism Risk Insurance Plan, which provides a government backstop for terrorism insurance, and the goal of Tria was to make it the terrorism insurance, both available and affordable, and that's exactly what it's done. This has come at no cost whatsoever to the taxpayer. It has been a great success, so I'm pleased that this is a legislative hearing on a bill to reauthorize Tria for a 10-year without any changes, and I'm an original co-sponsor, and I strongly support it. It is also, we had a discussion in New York with stakeholders. We had it at One Police Plaza where they gave us a review of the terrorist threats that are out there that showed again how important this is. And I'd like to submit to the record a letter that was there. It was signed by 345 different industry groups supporting a clean,
Without objection.
long-term reauthorization, as well as a letter from the Coalition to Insure Against Terrorism, which represents policyholders. Now, I'd like to ask Mr. Doyle, because he is an insurance broker, and your company interacts with all sides of the market for terrorism insurance, correct? And I know your company puts out a report every year on Tria. And I'd like to go back to the concerns that was raised by our good friend, the ranking member. And I'd like to say that in 2016, the Treasury Department published guidance clarifying that cyber attacks are in fact covered by Tria, as long as a cyber attack is a terrorist attack. And I think that's very, very important, and that Treasury's interpretation of Tria
Would the gentlewoman yield?
was accurate.
A quick question?
May I complete my statement, please? And Tria does cover cyber terrorist attacks. I will yield at the end of the point I'm trying to make. So in my view, this issue is settled already, and we don't need to change Treasury's guidance on cyber at all. So I'd like to ask Mr. Doyle, since you have experience with all sides of this issue, if, in your view, was Treasury's 2016 guidance on cyber attacks sufficient in your view?
Thank you, Congressman, for the question. I believe that the Treasury guidance, as I said earlier, that we supported around cyber in 2016 was critical. I do believe it's also quite clear that cyber policies, or excuse me, policies that cover cyber risk are supported in the backstop from the federal government. And again, given the evolving risk, I talked about the nascent stage of modeling. I would also point out that reinsurers, private reinsurers, are struggling to figure out how to reinsure cyber risk. So the support of TRIPRA to cyber risk is critical. And
one of the things that I really want to avoid is in the last reauthorization, the time expired, and that caused a real disruption for insurance in the country because people insure really years ahead of time. And if the program's not there, is it fair to say that if we don't reauthorize it quickly and get it in place, that we could possibly have another disruption in the market? Again, Mr. Doyle.
The sooner the better. You know, as I said earlier, we're now negotiating policies that run into a period where TRIPRA is not extended into.
I'd like to also ask you, in your view, is Tria working as Congress intended? Is terrorism insurance widely available and affordable? Mr. Doyle?
The gentlewoman's time is expired.
I yield back. My time has expired.
The gentleman from New York, Mr. Zeldin, is recognized for 5 minutes.
Thank you to our witnesses for being here today, and thank you to Chairwoman Waters and Ranking Member Mchenry for holding this important hearing. In July, President Trump signed into law the Never Forget the Heroes, James Zadroga, Ray Pfeiffer, and Luis Alvarez permanent authorization of the September 11th Victim Compensation Fund Act, H.R. 1327, which fully funds the 9/11 Victim Compensation Fund and reauthorizes it through the year 2090. I was proud to champion that legislation led by Congresswoman Carolyn Maloney because it was our duty as Americans to keep our promise to the victims, our first responders, and their families. 9/11 was not just an attack on New York or D.C., it was an attack on our entire country, who we are as Americans. That is why I'm also proud to be an original co-sponsor of H.R. 4634, which would reauthorize the Terrorism Risk Insurance Act, or Tria, for 10 years. The U.S. continues to face one of the most challenging threat environments, and terrorists will find any way to try to instill fear and destroy the American way of life. For example, the FBI New York field office noted in 2013 that Qazi Nafis, the Bangladeshi student arrested for plotting to attack the New York Federal Reserve in 2012, declared disrupting the economy was a stated aim of his. Quote, as today's guilty plea shows, the defendant Nafis came to this country not to further his studies, but to advance the goals of jihad. Once here, he devoted his energies to refining his plan to disrupt the U.S. economy and kill Americans and attempting to recruit others to join him. Ultimately, he resolved to commit mass murder in downtown Manhattan through an attack on the New York Federal Reserve Bank, a symbol of America's economy, end quote. Clearly, Tria is about economic security, but it's also about national security, and it is important we get this reauthorization across the finish line. Mr. Doyle, Tria may not actually expire until the end of next year, but I am worried about the potential market disruption if we do not act expeditiously. As I understand it, when insurers issue policies that extend beyond Tria's sunset date, typical practice has been that they insert springing exclusions that would automatically exclude terrorism going forward if Congress were to let Tria expire. And despite bipartisan support for extending Tria now and in past cycles, the market disruption is not based on some far-fetched or hypothetical fear. Congress actually let Tria lapse for 12 days in 2014 and 2015. Is that correct?
That is correct.
So we have clear market disruptions in the form of springing exclusions, which are only going to proliferate as we get closer to the sunset date, and we have a rational historical basis for the market not being able to trust Congress to act in time. Are we playing with fire if we up here in Congress just take our time and assume this will get done sometime next year?
The market disruption is real. There's no question about it. As I mentioned earlier, as risk begins to aggregate during the beginning of next year, insurers will either put exclusions on, refuse to quote, issue short-term policies to get greater visibility into whether this bill is reauthorized.
I'm also concerned that next year is a presidential election year, and that can often make legislating even more difficult than it normally is. Tria has been reauthorized 3 times thus far, and the only time it was in an election year, the 2014 midterms, actually saw Tria lapse for 12 days. Would you agree that next year's cycle adds to the urgency to start this process now?
Yes, I'm concerned about the political cycle. I'm also concerned about the insurance cycle. There's a pricing cycle to our business, and as I said earlier, pricing and availability of coverage, broadly speaking, is challenging at the moment.
I yield to Mr. Stivers.
I just wanted to make a quick point, and I appreciate it, that any future Treasury Secretary could undo the guidance, and I think it is really important that we take a few minutes to add a little section on cyber into this bill to create some long-term clarity. I think it's really important, given the increasing risk of cyber that everybody on the panel acknowledges. I'm not asking to delay a long time. I'm just asking for a really important clarification. It's the gentleman from New York's time. I'll yield back to the gentleman from New York.
I'll yield.
Yeah, I agree that it's a pressing issue, Mr. Stivers, but many of us have lived through the time when it expired and the pain that it put on the industry and on individuals, on development, the uncertainty, and I want very much to avoid that. We all know how hard it is to get anything passed. So I would suggest that we legislate, and I'd be glad to work on a panel with you, a cyber separate bill, but not make it part of this bill. It's too important. We can't do anything that could end up in a negotiation that goes past the time that it expires. And I have here 253 companies in America saying that they've got to have it now just as fast as possible. I say 253 companies can't be wrong, and I think we should listen to their words, asking for us to pass a clean bill for 10 years right away. And there may be another host of other ideas
The
that we
gentlewoman,
could move forward.
time has
Thank
expired.
you. Thank
No,
you.
The gentleman
Madam
from
Chair,
Texas,
thank you.
Mr. Gooden, is recognized for 5 minutes.
Thank you, Madam Chairwoman. This question for Ms. Dinkins. Past Tria hearings have focused on the difficulty insurers have of modeling and pricing risk from acts of terrorism. And these discussions have often centered on whether information sharing between federal agencies and insurers is a plausible way to improve actuarial models. To what extent, if any, is threat information shared with insurers today?
It's my understanding that that information is not shared today with insurers, and that has certainly presented a challenge to model the exposure, or for insurers to model that exposure.
So that's something this committee probably needs to address as well then.
Agreed.
Thank you. Mr. Doyle, I think a lot of people don't realize that with the expiration date of next December, that means that policies in effect that incept on January 1st are already being negotiated. It's already October. These policies, with expiring policies at the end of this year, they're in negotiations now. How important is it that we have this quickly done? I mean, we're already to the point. An earlier question was, what's the latest? I think we're already past the latest point because your negotiations with your January 1st renewals are probably already in trouble. Could I ask you to expand upon that, please?
Yes, as I mentioned earlier, the market disruption will be quite real. Early on, insurers will look at their exposure and their ability to aggregate the risk that's acceptable to their balance sheet. That'll be in part informed by regulators, rating agencies, and their own view of the risks that aggregate under their leadership and management. And that'll build during the course of the year. But right now, we're negotiating January 1st renewals that cover terrorism risk in them. And so we'll begin to face exclusions, shorter-term policies, and other market disruptions as we enter into that period.
So what do you tell clients who say, what do we do? What do you tell them? We're waiting on Congress?
I'm sorry?
Do you just tell them we're waiting on Congress?
You know, we certainly share with them that we're advocating on their behalf for an extension of the bill. We also try to advise them to get as much coverage as early as they can. But again, as I pointed out earlier, when the chairs, royals, and chiefs have risks right next to one another, those are real kind of aggregation scenarios that risk experts look at and realize we can't take that risk any longer. And so some insureds will be left as the market goes into 2020 without the possibility of coverage.
Thank you. I appreciate your testimony. I share Chairwoman Maloney's views that hundreds of companies can't be wrong. Would also submit a document from the industry, the Terrorism Risk Insurance Report from another national broker into the record, please, and I yield back.
Without objection. Does the gentleman yield? Oh, thank you. I recognize myself for 5 minutes. Thank you all so much for being on this panel and for your insight. I join my colleagues again on, expressing some concern in regards to making sure that our residents are protected. And, under the current Trump administration, the United States has experienced a rise in violent extremist attacks. Last year, a white supremacist yelling anti-Semitic slurs opened fire in a synagogue in Pittsburgh, killing 11 worshipers. The past year, 3 historical black churches have burned in less than 2 weeks in a single Louisiana parish. A few days ago in my home state of Michigan, a local synagogue in Grand Rapids reported it had been vandalized with anti-Semitic hateful rhetoric. The 2002 Tria definition of terrorism was described as acting on behalf of any foreign person or foreign interest. In 2007, the removal of the word foreign was deleted, of course, and thus expanding the definition of terrorism. We know that domestic terrorism is becoming more and more of a threat to our communities. And so, Ms. Lindsay Myers, in the insurance industry, do existing policies cover losses incurred in domestic acts of terror currently?
It depends on what's in the actual policy that we get from the insurer. There are policies that are out there that does provide coverage, but then there are other carriers that does not provide that types of coverage.
So how would premiums for businesses taking up terrorism coverage change if more explicit language is added to Tria to account for rising domestic terror attacks?
If that premium is included in and it is not considered excessive or discriminatory, it would sort of settle the playing field for those that provide terrorism coverage.
Under the Tria, does the Treasury Secretary have the authority to define what constitutes an act of domestic terrorism?
Yes.
So I have read that some religious organizations, and I'll submit it for the record without any objection, that find coverage for terror attacks from white supremacists to be unaffordable. Mr. Carter, what can we do to ensure that loss incurred as a result of domestic acts of terrorism by right-wing extremists would be reimbursed by Tria program?
Thank you for the question. I'm sorry. I hope I don't get I don't hit the wrong answer here, but my understanding is, as you think about some of the other acts that are not, that you were just speaking about, that are not necessarily a part of Tria, so I'm thinking about extremist types of acts. Mm-hmm. There are policies available in the market for active shooter, for example, and in my world of education, that would be an example. The limits of liability on a policy like that and the terms of coverage are not at the levels that we would be talking about with Tria. But I'll pause there to say, because I'm not sure I hit your question. If we're talking about alternatives that are in the market, I would go towards that active shooter, for example, but I'm not sure that was exactly your question.
Yeah, no, I'm actually very pleased that they deleted the word foreign, because I do think there's all forms of terrorism. Domestic terrorism is at a rise right now, and we haven't actually had I think it's been a huge threat to especially faith-based organizations, schools, and so forth have been dealing with that. And I want to make sure that we're capturing those folks that I feel like are very community-based, and I don't know if they're able to get access to affordable insurance coverage. And I'm trying to figure out, I know we're talking about cybersecurity and other things, but as we're looking at this, what are we doing to ensure that there's protections for those kinds of attacks?
Yes, so I know that there's availability, as I mentioned, for active shooter policies, for example, if they use that mode to actually commit the act. There are also cyber packages that are available in and around certain types of businesses, readily available. Beyond that, I think I think my answers would be limited, because we do liability for schools, colleges, universities, and perhaps a broker or someone who's really involved in advising a client could say a little bit more about what's available.
Okay. Does anybody else have an answer to that? Mr. Webb, I saw that you were...
Yeah, I think that to a significant degree, the make available provision that's in Tria is the thing that most directly addresses it, in a sense that, and that the impact of that is essentially, if you're purchasing an active shooter policy that would cover, someone crazy or someone criminal, the insurer must also offer a terrorism rider on that. On the availability question, or on the affordability question, that largely goes to the state insurance regulation, in a sense that they are the ones that are overseeing the direct policies, not excessive premiums and the like. And so the first line in that question is the state insurance regulators.
Thank you. The gentleman from Tennessee, Mr. Rose, is recognized for 5 minutes.
Thank you, Representative Tlaib. I want to start by hopefully putting our witnesses here today at ease. I support reauthorizing the Terrorism Risk Insurance Act, or Tria. As you all know, Tria established the Terrorism Risk Insurance Program, or TRIP, which has served the purpose of providing stability to a market that was destabilized following the attacks on 9/11. I believe this program is still needed to continue providing that stability. Thankfully, we have never needed to see Tria in action, but it is better to have this program and not need it than it is to need it and not have it. With that said, however, I would like to play the freshman card here. I was not here when Tria was first authorized in 2002, and I was not a member of Congress when Tria was last reauthorized in 2015. I believe I owe it to my constituents in the 6th District of Tennessee to ask questions about this program before it is reauthorized. No program is ever perfect, and no program should be reauthorized without robust and fair scrutiny. The first area I'd like to address is with regards to cyber, and I know we've talked about that some today already. The Tria statute itself does not speak directly to cyber insurance, but the Treasury Department did issue guidance in December 2016 to make some clarifications regarding cyber insurance. Ms. Lindley Myers, why did state regulators move to introduce a new cyber liability line of insurance?
There is one from the NAIC, but then New York also has one. And so the thought is to make sure that we could cover those issues because a lot of the discussion of whether or not cyber is covered or not would be through Treasury. And so this was a sense of honing in to assure that members of our public, the consumers that we regulate, would have a sense of security of what a cyber attack could mean to them.
Thank you. Mr. Doyle, you mentioned in your testimony that Treasury's guidance offered some needed clarification that losses from certain cyber attacks would be covered. Was this guidance helpful?
Yes.
In your opinion, would there be any downside to Congress codifying this regulation?
I suppose it would depend on how it codified it, but...
Mr. Doyle, you also mentioned the evolving threats we face in today's world and changes in attack methodologies, specifically mentioning the attacks in London and New York that used vehicles. Cyber threats evolve rapidly. There will be threats in 5 years that we cannot even imagine today. In Aon's 2019 Terrorism Risk Insurance Report, Aon recommends a study of cyber exposure and its potential impact on TRIP. To any of you, would anyone here today oppose a study to this end, and would it be valuable to better understand this emerging space? Mr. Doyle?
Well, I don't advocate for an Aon position, but
a study.
But a study of better understanding potential cyber terror risk, for sure. I mean, the entire industry is focused on better understanding those risks all of the time.
Mr. Wabel?
In the past, I have found the work that GAO has done studying in this area to be extremely helpful. So I certainly think that a future study like that would be as well.
Ms. Deakins?
So I understand that there is a study underway right now with the GAO, so I think there are others that believe that the study is important, and I think that work's being done currently.
Mr. Carter?
I think a clean reauthorization weighed against a weight and study would support leaning towards the clean reauthorization, and then have the study going alongside that. The cyber industry is evolving, as you mentioned. There's no real read on the timing of that development. There's a lot of information that would have to be gathered and so forth, but I think the clean reauthorization would be the business decision.
Mr. Wable, in your testimony, you note that the take-up rate for cyber insurance is less than that of the take-up rate for general terrorism and coverage. Why might that be?
My assumption is that cyber is such a new peril, and so businesses don't necessarily recognize cleanly that they have the exposure. There's just so much uncertainty in the cyber market about what it covers and how it's going to cover it that I think that's an artifact of that.
Thank you, and I yield back.
I thank the gentleman, and I'd like to thank our witnesses today for your testimony on this subject matter. You have certainly shed light on the need for this legislation, and without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able, and without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record, and this hearing is adjourned. Thank you.